Welcome back. Well, on to some corporate opinion then. Arvind Fashions, the apparels business of Arvind Limited, expects to hit revenues of 10,000 crores by 2025. Speaking exclusively to CNBC TV 18's Priya Sheth, Arvind Fashions MD and CEO J. Suresh says that the company expects to be listed by month end as well. Here's a slice of that conversation.
Growth is not small. It still will be 15 to 20% in terms of CAGR. But our focus is going to be improving the profitability of the company and definitely the return on capital employed. We have actually committed to the market that we will improve our EBITDA margin by 100 basis points every year. Growth has never been an issue for us. I think with the kind of portfolio which we have now made, I'm sure that 10,000 crore we should be able to hopefully reach probably a year earlier than 2025. We expect that in 2022, power brands, which are around 2,600 crores now, will go up to 4,000 crores. So that's our target on power brands. The specialty retail part, which is Unlimited, Gap and Sephora, should be anything between 2,500 to 3,000 crores. Then we have not attributing too much growth on the emerging brands, but still we feel that 1,000 crores is what the emerging brands can deliver. So this actually sums up to almost 8,000 crores. So we say that even with a certain probability, we are looking at 7,500 crores.
Okay, so that is Arvind Fashions with some perspective on the business and how things are likely to be. There's some news at the bottom of the screen. We'll have Parikshit join us and just debate. Okay, Parikshit is with us. This is government sources telling Parikshit what the thinking really is as far as a package for farmers. Farmer support is concerned. Parikshit, morning. What are you hearing?
Well, we're hearing that nothing concrete has emerged as yet, but yes, there are discussions among the top levels in the government, level of the Prime Minister's office. There are discussions going on in Niti Aayog, Agriculture Ministry, Finance Ministry. The pros and cons of various measures is being discussed. What we are hearing that at least 4 to 5 measures are being discussed by the government. Direct benefit transfer of 4,000 rupees per acre per farmer is also being considered, but the cost involved is very high. So top sources in the government saying that it would be speculative at this stage to really say that the government is going to announce this direct benefit transfer because it is only in consideration stage right now. What is most likely is the government announcing changes in the Kisan credit card loan scheme, which could mean conversion of the KCC card to RuPay cum debit cards. At the same time, increasing collateral free loans under KCC to about 2 lakh rupees, ensuring greater coverage of Kisan credit cards to about 80 to 90% of the farmers in the country from the current 45 to 50%. So these are the changes being looked at. Top sources in the government saying that changes in KCC scheme are the most likely right now, and the government is studying the KCC scheme in detail to make changes very soon.
Okay, all right, Parikshit. Thanks very much for joining in and giving us that update. So that'll be important to watch out for, especially in terms of any execution of these big bang announcements ahead of the general elections. We need to take a break now, but up next, we will get more details. In fact, I have a couple of pharma stocks in focus.
Oh yeah, CADILA and GLENMARK.
Yes.
In focus, right?
Yes, absolutely. Well, we have GLENMARK as well as CADILA, which are in focus. Remember that there is this huge JPM conference which is taking place in the US right now. So there is this emerging market day which takes place where, the likes of GLENMARK, CADILA, Apollo Hospitals, all of these companies, Lupin, all of them will be presenting at this conference. So they've uploaded their presentations on the exchanges. So just a couple of key takeaways. First, from GLENMARK, they expect an annual revenue of around $1.5 billion in FY19. The EBITDA pre-R&D expense is expected at 30% in FY19 and consolidated R&D expenses at around 12 to 13%. They've anticipated a launch of a couple of dermatology as well as respiratory specialty products in 2019-2022. So that's the kind of timeline they've given. Overall, the company has said that they have generated 8 out-licensing deals which have generated over $200 million in cash payment, and currently they have 2 molecules which are in phase 2B. After you finish phase 3, 3, that's when the molecule will possibly see the light of day in the market. For CADILA, a couple of updates. They've said that the key geographies continue to be India and US. They will focus on building scale in a couple of 2 to 3 other key markets, and they aspire to grow in line with the India pharma market, which is in double digits despite challenges. So that's the kind of focus that they have. They're looking to strengthen their core portfolio with launch of specialty drugs, biosimilars, and in terms of the Heinz acquisition, they're looking to expand their sugar substitute franchise, which is basically sugar-free, and they want to capitalize on the recent acquisition of Heinz. They're focusing on niche products, 505(b)(2) kind of launches. Again, the same kind of strategy of complex generics and specialty products and biosimilars, and overall, they're expecting, expecting to grow in line with the market.
Okay, we'll get you more in terms of other presentations and what companies, Indian companies and even global companies have to say, which may have a bearing of on impact on Indian businesses. 66 points on the Nifty. So we're, steeply lower now from the day's high, almost 50 points off the high, 10,792. We take a very quick break. We are back with some more opinion on the other side. We also get you F&O trades with Rahul Shah from Motilal Oswal in just a bit.